market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, China has threatened to hit back at Donald Trump's trade threats after the U.S. president unveiled additional 10% tariff on Chinese imports, raising the risk of tensions spiraling between the world's largest economies. The levies are set to take effect on Tuesday, one day before President Xi Jinping heads into the party's biggest political meeting of the year. So to talk politics, geopolitics, and what it means for the economy, joining us, Rosalind Matheson, our EMEA news director. Ros, thank you so much for being here. We'll talk about the economy in just a second, but when you look at what Trump has announced, again, a lot of question marks on when, if, and how these effects take place, but an additional 10% tariffs on China, what will the impact be?
Well, the impact could be quite immediate, but also the timing is really the interesting thing here, is announcing this further 10% tariff on China right before Xi Jinping. You were just noting the president of China is due to have their National People's Congress. It's like the biggest political meeting in China, where they're going to set out a lot of economic policies, including their bid to rebalance the economy much more towards the domestic side to sustain growth there. And so you're putting this in to that conversation. So what does that mean in terms of how that meeting goes? What does China come out of that meeting with? And do they decide that they now have to retaliate? Because what you saw with the first 10% was, if anything, quite a measured response from China. You had Xi Jinping saying, I still want to talk to Donald Trump, the US president. That call, by the way, has not happened yet and probably won't now before the NPC. But there was the idea that they were going to talk, they had a personal rapport, they could work things out, and that if anything, the US was going a bit softer on China than on other places, but that's kind of blown this a little bit out of the water.
Meanwhile, President Trump also said that he would restart this long-stalled negotiations on trade with the UK after meeting British Prime Minister Keir Starmer.
We're going to have a great trade agreement. One way or the other, we're going to end up with a very good trade agreement for both countries, and we're working on that as we speak. I think we'll have the confines. I think we'll have something maybe even in terms of possibilities agreed to very shortly.
Our trading relationship is not just strong, it's fair, balanced and reciprocal.
I mean, the UK press is pretty much on a high. They keep on saying, you know, Keir Starmer got this, he won this. I mean, what more do we know about a possible trade deal?
Well, it's interesting because he does seem to have had a good meeting, but what did he actually come out of it with is the question, not necessarily what he wanted on Ukraine, for starters, but also on the trade side. What we're hearing is that the UK is talking about a very narrow trade deal focused very much around tech and AI. What Donald Trump would want, no doubt, is an all-encompassing, what he would call beautiful and huge trade deal. And it seems already that what the UK is intending to talk about is quite different from what the US is intending to talk about. So the prospect there for some kind of disagreement is quite significant. But for now, the UK does seem to have dodged a bullet on the trade front, and that's because naturally they have a different trade picture with the US than, say, Europe and other countries do. Perhaps the one benefit of Brexit is that the UK on its own looks a bit easier for Donald Trump to handle, but you know, the question is how long can that last? And when they really start the nitty-gritty of the trade conversation, the US is probably going to want more than the UK is willing to give.
So interesting. Ros, as always, thank you so much, Ros Matheson, there with the very latest on Donald Trump. Now, let's also bring in Claudio Irigoyen, head of global economics research at Bank of America. Claudio, thank you so much for joining us. I mean, there's a lot going on in economics with tariffs, inflation. I think you start your note by saying when confusion meets uncertainty. What are you most worried about?
Okay, so first of all, it's a pleasure to be here in London with you today, Francine. I think the difference between uncertainty and confusion is important because we can agree that we don't know whether Trump will impose tariffs or not, whether they will be permanent or not. We agree on that. That's uncertainty. But confusion means that even we agree on that, we might be confused or we have disagreement about the impact of those tariffs on the economy. Some people think that this is going to be recessionary for the U.S. Some people think it's going to be inflationary for the U.S. Some people think it's going to be stagflationary, so recession and inflation. And that creates confusion also from the point of view of the Fed, because it's not clear whether they should cut interest rates because it's a negative shock for the economy. hike interest rates because this is bad for inflation. We are seeing inflation expectations moving up already, but we are seeing also consumer confidence moving down. So that creates a lot of confusion.
And this, I mean, the market for me over the last maybe 3 weeks has changed a bit to concern about inflationary pressure to really, as you're saying, concern about a growth slowdown. How do you see the U.S. economy going?
The U.S. economy is still risk-adjusted, the best story out there. So if you compare the U.S. economy relative to Europe, relative to China, it's still a reasonably good story. Now, I think the markets are, given that I'm in London, I'm going to play with words, but we are probably approaching a distrust moment. In the sense that markets were thinking, well, Trump will not go that far with tariffs, will not go that far with immigration. But obviously, if you threat your partners, your trading partners, sometimes you have to deliver some of the threats in order to be credible. So what we're seeing overnight is, again, Trump going to Mexico and Canada and saying, I haven't seen enough progress. I want to try with 25% tariffs. Let's see if, with tariffs on, you deliver on what we need.
So what do you think is priced in at the moment? Again, if there seems to be a belief, you're right, in the markets that he won't go as far as hurting equities or hurting bonds.
Yes.
Is that an underestimation? Because, again, if you try and make an omelet, you're going to break things. And so inflation, again, are we going to import inflation because of tariffs, or could they have a deflationary pressure because of also what's happening in China?
I think in China we are having good news. I mean, I think the meeting between Jack Ma and President Xi was very well taken by the market. Mm-hmm. But on the other hand, we have, as you mentioned, consumption still very depressed and China exporting deflation to the rest of the world. Regarding tariffs, it's hard to determine whether a big chunk of the tariffs will be passed to consumer prices, how much is going to be absorbed through profit margins, and how much is going to be absorbed by the dollar appreciating. Some impact on prices there will be. Yep. We are seeing, in some cases, consumers trying to front-run the increase in tariffs and buying goods. We are seeing that in the manufacturing sector. But probably we're going to see both. We're going to see a slowdown a little bit in economic activity and some pressure on inflation. Temporary, but still some pressure.
Claudio, what do you think the Fed does, actually, this year? And again, market expectations have been all over the place.
Yeah. We've been holding an out of consensus call on the Fed for a while that the Fed will not cut interest rates. Because when there is so much uncertainty and it can go both ways, the option value of waiting, it's higher than ever. So the Fed will try to figure out the impact. Mm-hmm. Obviously, it's extremely important that inflation expectations remain anchored. As long as they remain anchored, they will probably remain on hold. If we are seeing a significant impact in economic activity and not so much pressure on prices, they might consider the cuts. We don't think we are there yet. And obviously, if the pressure is much more on prices rather than economic activity, they might consider some hikes. We are not there yet.
It's interesting. So we've been covering Doge, of course, trying to understand that, the impact economically is still very difficult, for me to determine. But you're starting to have numbers on what kind of impact it would save the U.S. government. Yes,
I would say the following. The U.S. The deficit, the public sector deficit is 7.5 points of GDP. Mm-hmm. You are not going to fix that with Doge. Doge might create some savings here and there, but it's not the solution to the deficit. It's a more structural problem. And by the way, the deficit that you have is the counterpart to some extent of the current account deficit that you have. I think it's important to understand that you're not going to fix the current account deficit or the trade deficit with tariffs. It's a product of macroeconomic imbalances. It's a difference between savings and investment. The U.S. economy doesn't save enough, especially because of the public sector, and it's a very attractive destination of capital because risk-adjusted is the engine of growth of the world. So you have a lot of capital inflows that appreciates the dollar, and that creates the current account deficit that Trump is supposed to fix with bilateral negotiations with countries where the U.S. has a trade deficit. We don't think it's a solution.
But again, it's sold as a negotiating tactic, right? To get something back, and that's what we don't know. We don't know how these tariffs or threats are used.
Absolutely. We are on the camp that Trump will negotiate country-specific comprehensive packages involving trade, immigration, energy, defense spending, in the case of Europe. And Trump might impose tariffs tomorrow or Monday on Canada and Mexico. That doesn't mean that they will be permanent. Maybe Canada and Mexico deliver on what Trump wants, and therefore those tariffs will be reduced or eliminated. Remember, the supply chains are so integrated between the U.S., Canada, and Mexico that U.S. companies will be hurt. I don't think Trump wants that.
Claudio, thank you so much. Claudio Irigoyen there from Bank of America stays with us. We'll talk a lot more about Europe and some of the emerging markets next. This is Bloomberg. Back with Claudio Irigoyen from Bank of America. Claudio, thank you so much for sticking around. We were talking a bit before about the U.S. economy, some of the quirks of what trade and tariffs do and inflation and all the like. Where does Europe sit in all of this?
Well, Europe will have to sit to negotiate also with Trump. Probably the negotiation, as I mentioned before, is going to be a comprehensive negotiation that will involve defense spending. Trump would like to spend less on defense, the U.S. to spend less on defense, and the rest of the world to spend more on defense, in particular Europe, and ideally buy the weapons or the inputs from the U.S. That would be probably in exchange of lower tariffs. But the negotiations will be bumpy. It doesn't mean that the threat will be no tariff if you spend on defense. Maybe it's tariff first, and then you guys regroup and come with a proposal to counteract the tariffs. And Europe is in a very tough situation, obviously.
That's because of consumer spending. I mean, the economics, fundamentals at the moment were not great to start with.
It's not great. There are still a lot of challenges on the political front in France, in Germany with the new government. China is not doing well, and therefore is not buying as many manufacturing goods from Germany in particular, from Europe. China is entering into the auto market in Europe and competing with Germany. So that's a very important structural shock that is not going to go away, has nothing to do with Trump. And there is this issue of whether if Trump imposes more tariffs on China, maybe this 10% is not going to make a big deal in this sense, but if it goes really, really high, like a 40, 50%, China will have an incentive to sell goods to the rest of the world, and then Europe and other countries will impose tariffs on China. And then we are talking about a completely different game. This is going to be very bad for global growth.
That could come. I mean, what's the possibility of that? Is that like a 40% possibility or 20%?
I think it's not as high. It's more, I would say it's more the 20 than the 40. And the reason why is because if you approach that, you're going to have a huge correction in the stock market. And Trump will react to that. I think the limit to Trump policies are U.S. companies. And let's not forget that 40% of the revenues of the U.S. listed companies comes from the rest of the world. So global growth slowing down is not good for U.S. companies. And there is a very direct transmission channel between a correction in the stock market and consumer confidence in the U.S. So will Trump ignore that correction in the stock market? I would say no.
Claudio, is there one thing that we're underestimating, whether it could be AI and the impact on the economy, whether we're expecting too much or too little? But also, if something happens with China, will some of the neighboring countries benefit from possible trade because it's changing the way partners deal with each other?
Yeah, there could be winners and losers. For instance, depending on the negotiations between the U.S. and China, countries like Brazil might end up benefiting because if China imposes some type of tariffs on agricultural goods in the U.S., Brazil will sell more to China. As you mentioned, neighboring countries might benefit through the redirection of trade. But that's when it becomes more complicated, because the idea of universal tariffs is to try to avoid those triangling of trade. And this is when it comes really bad for global trade, because it will hurt consumer confidence globally for sure. There is no way out.
If there is something bad in the economy, where do you see it first?
In the U.S. economy, or
in general, actually, the global economy? Does it start with the U.S. consumer, or is there an indicator that you think would be, that where the alarm bells would go off?
Yeah, I mean, look, when I talk to CEOs of companies, I come from Dubai. We had our Global Investor Summit in Dubai, and I had the opportunity to talk to a lot of people. And when you talk to the CEOs of companies, they are, as I mentioned before, they are confused. And when you're confused, you stop investment decisions until you have a better understanding of how your relative prices will move. So it's too early to tell. I mean, the uncertainty escalated in the last month and a half or so, so we are not seeing yet on the hard data, but soft data is what we need to look at. The surveys at the ISM, where you ask companies what they are planning to do, consumer confidence. Usually those soft surveys are an imperfect predictor of what's going to happen to hard data, but this time could be different. We're paying a lot of attention to that. We're talking to a lot of people. We're talking to our clients, because that's what you sense first what might happen.
But, Claudio, and your biggest worry is that this lack of investment now could lead to something ugly in the future, or that it's just a period of uncertainty now?
Well, I think when you that's why I use the word we might be approaching a distrust moment. When you lose trust on U.S. policies, then you have to work hard in order to recover that trust. So it's very easy to lose the trust and very hard to recover. So I think that's the issue. There are many things that can go very well with Trump policies, like deregulation, etc. But the timing or the sequencing of those policies is important. If you start with putting a lot of uncertainty through tariffs, by the time you either cut taxes or deregulate the economy, confidence has been hurt already.
So interesting. Claudio, thank you so much for joining us. That was Claudio Irigoyen, the head of global economics research at Bank of America. Coming up, British Airways owner IAG is one of the big gainers in Europe this morning as profit beats estimates. So we have all of the details next. This is Bloomberg.
We want a ceasefire. We want that this ceasefire be guaranteed by European countries with an American backup.
Certainly strengthening our defense effort in the course of the next years is something extremely important, because we do want to strengthen the European pillar of NATO.
Of course, what we know in Europe is that we have to strengthen our own defense capabilities. We have to reinforce the defense industry in Europe.
There's now an intense discussion underway regarding how we can further contribute to that defence and security.
We set out a clear plan for taking defence spending to 2.5% of GDP by 2027, and that will be funded by cuts in overseas development assistance. That is the right thing to do, given the threats we face from Russia.
Global finance chiefs talking to Bloomberg at the G20 finance ministers meeting in Cape Town. Don't miss our new monthly show, Next to Africa, airing tonight. Now, IAG reporting quarterly profit that beat estimates and set plans to buy back €1 billion in stock. Now, operating profit at its flagship carrier, British Airways, has risen 14% in the past year. That's as £7 billion transformation boosts results as its biggest unit. Now, the company says leisure travel remains robust. Corporate travel has also increased throughout the year, but has not recovered to pre-COVID levels. Coming up, more on the UK's meeting with President Trump. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. European stocks slide as a global equity sell-off continues after President Trump ratchets up tariff threats. Donald Trump says he will restart long-stalled trade talks with the UK after hosting the British Prime Minister, plus the US President backtracks on calling Ukraine's president a dictator ahead of today's White House meeting with Volodymyr Zelensky. Now, more on one of our top stories now, when UK Prime Minister Keir Starmer left his meeting with Donald Trump with much to be satisfied about, despite falling short of securing a US military backstop to protect Ukraine. Now, Starmer charmed Trump by delivering a personal invitation from King Charles to attend a second state dinner in the UK, which the Prime Minister cast as unprecedented and a testimony to the close ties between the two nations.
The United Kingdom is a wonderful country that I know very well.
Our countries have been bound together for a very long time now. The closest alliance, I think, of any two countries when it comes to prosperity and security. And our trade, obviously, is fair and balanced, and in fact, you've got a bit of a surplus, so we're in a different position there. And obviously, we've contributed hugely in relation to Ukraine, and taken together with Europe, there's about 50%.
It'll work.
Does that mean there won't be any sanctions on the UK then?
Well, I have to take a look. You know, the British have been incredible soldiers, incredible military, and they can take care of themselves. But if they need help, I'll always be with the British, okay? I'll always be with them. If you want peace, you have to talk, both sides. As I discussed with Prime Minister Starmer, the next step we're making is toward a very achievable ceasefire.
It can't be peace that rewards the aggressor, or that gives encouragement to regimes like Iran. We agree history must be on the side of the peacemaker, not the invader.
I think we'll have two deals. I think we'll have a deal on ending the war, and I think we're going to end up with a great trade deal with you.
For more on this, let's get straight to Leslie Vinjamuri, Director of the U.S. and Americas Program at Chatham House, and Bloomberg's Greg Sullivan. So thank you both for joining us. Leslie, there's a lot to unpack. We had the visit from Emmanuel Macron to the U.S. We now have the visit of Keir Starmer. And then today we actually have Ukraine's President Volodymyr Zelensky. I mean, what do you make? Again, it's quite unclear whether he now thinks that, Volodymyr Zelensky is a dictator or not. It seems to have gone well with Keir Starmer, but you kind of never know.
Well, look, we are, 2 weeks from the vice president's speech at Munich, when we were all listening to the sounds of the death knell of the transatlantic partnership. And my God, what a change of direction, watching Britain's prime minister and America's president alongside each other, and really affirming the connection of that relationship. Obviously not in perfect alignment on next steps when it comes to Ukraine, and the coordination on this visit by Keir Starmer to meet Donald Trump, not only within the British government, but really across Europeans in that series of meetings, is very impressive. And it sounds right now like a very different relationship than it did just 2 weeks ago, which I think speaks to the point, which is that we've got to be careful not to be drawn into President Trump's machinations, his words, and really to take a very measured approach, to remember that it's absolutely essential to work with the U.S. but also to hold the line. And I think Starmer did a nice job on that. The critical question is here: Donald Trump clearly wants a sequenced approach to peace with respect to Ukraine. He's not going to play his hand yet when it comes to that question of what the U.S. would do in providing any measures to secure that peace, the so-called backstop air defenses, question of intelligence, if there were European peacekeepers on the ground. Clearly, all of these things are extremely difficult. They're very hard to imagine. It's very difficult to imagine that the UK or Europe would put people on the ground without securing protecting them. It's very hard, frankly, to imagine that President Trump would wish to see that. He isn't going to be the president that wants to see Europeans killed. He certainly won't want to see Americans killed if they're working in Ukraine to secure some sort of critical minerals deal. So all the details are very messy. But Donald Trump isn't going to want to see devastation and loss in Ukraine. He doesn't want to be He doesn't want to have Joe Biden's Afghanistan as part of his legacy, but he is not going to reveal his hand right now.
Greg, what do you think actually President Trump wants right now? Does he want a deal at all cost? Who does he listen to in terms of foreign policy when when it has to do with Vladimir Putin? How close are they?
Well, that's a very good point. One thing that we do know about Donald Trump is that he has consistently said that he does want to bring about an end to the fighting swiftly. It appears that he's very driven to secure this deal. And initially, there were European worries that it would be done without the input of the Europeans or the Ukrainians. We saw some quite eye-opening moves from the U.S. administration early on, the direct outreach to Vladimir Putin without informing European allies, the vote in the UN and labeling Zelensky a dictator, albeit he walked that back yesterday. There was initial concerns that the deal was the most important priority for him and that Ukrainian security concerns might fall by the wayside. Now, of course, those security concerns, as Leslie said, that's a huge issue, and it's very hard to see how they overcome that. What kind of security guarantee is going to be valid for deterring Russia that Russia will accept? The U.S., Trump has ruled out putting U.S. Boots on the ground. Europe has said that they don't see a viable option without U.S. support. Obviously, there are talks in Europe about putting peacekeepers in Europe, but Russia also has said that they don't want to see NATO peacekeepers. So it's quite a quandary, and that will be a huge sticking point for getting to any kind of ceasefire up ahead.
Leslie, do you understand, at the end of the day, would Donald Trump rather have a half-hearted deal, but a deal on Ukraine than a good deal, but even if it takes longer?
Hey, look, I think he would like to get that deal quickly and then deal with the rest. And this is a president who is, impulsive. He knows what he wants. He doesn't really have that strategy and that more deliberate approach. So I think his view is probably, and we don't know, but his view is probably push everybody hard, right? And right now he's pushing Europe extremely hard to step up and to recognize that this is the approach that he is going to take, and they'd better be prepared to play ball. He's pushing Russia seemingly much less hard. And I guess the logic here, if we're going to build a logic in, it's because he wants to Russia. He probably sees Russia as having an upper hand, more cards to play. And so, bringing Russia in order to get the first stage, which would be a ceasefire, it gets incredibly tricky after that. And again, I think this is where the people around Donald Trump will be intensely aware of that. Many of them supported and have given their words over the past few years to defense of Ukraine. They're having to support President Trump Leslie, now, and they'll wish to see that peace be secured.
Yeah, something seems to have changed, and I don't know whether it's because economics or deals on minerals or deals also with copper and aluminium now overlay everything. Is this foreign policy, or is this also about trade tariffs and just getting a better deal for corporate America?
Look, there's an America first approach. What's in it for us? We put a lot of money there. We want to see something back. This is, Donald Trump's line. It's partly communicating this to Americans, to his base, demonstrating that America first approach is a serious one, that he's delivering something for them that President Biden didn't deliver. But is it realistic? Are there the nuts and bolts that it would take to actually deliver this? No. And it sort of leads you to believe that it is all part of, talking a tough game when it comes to the Democrats, when it comes to the Europeans, when it comes to the Ukrainians, to force everybody's hand. Will he deliver on that? Very unclear. But at some point, he is going to want to be able to say that he's achieved something. And if the war goes on, or if Europeans and Americans put their lives at risk and die, or if there's a loss of Ukraine in a dramatic way, any of those things will play badly for President Trump. So I would anticipate that he will continue to revise his approach as things progress. But he's going to push right now, no matter what, regardless of what people will say about conditionality. He's going to push very hard for that ceasefire, and he's going to do it directly with Vladimir Putin. He's made that very clear.
Greg, how do you see this going forward? Again, how do you explain, if we don't know yet, but how do you think you could explain the U-turn from President Trump? Did he listen? Is it Macron going to D.C.? Is it Keir-Starmer going to D.C. that made him say that he's surprised that he called Volodymyr Zelensky a dictator?
Well, on one hand, I do think that it is this drive for a deal. There might be some recognition that Ukraine at some point has to sit at the table and will have to agree to terms, and he wants Ukraine to agree to terms that are favorable for sealing a ceasefire. But on the other hand, there is this mineral deal that they appear to be making progress on. Trump does want to be able to hold up a deal and say, look, I have secured a deal. I am getting something in return for U.S. support, and perhaps it's more favorable at this moment. He sees Zelensky in a more favorable light. There's also the fact that he's a bit mercurial, and the last person he talked to sometimes seems to have an effect on him. So there's a lot of factors at play, but certainly the idea of getting towards a deal and this critical minerals agreement do seem to be playing into the mix here.
Thank you both for joining us, Greg and Leslie. Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House, and Bloomberg's Greg Sullivan, editor on our Russia coverage. Now, coming up, Bitcoin tumbles from its all-time high of just 6 weeks ago. We'll discuss why next, and this is Bloomberg. European equities following Asia lower as investors shun risk bets after President Trump doubled down on tariffs. The sell-off is stabilizing. For more, let's bring in Bloomberg's Valerie Teitel. Valerie, what are you seeing?
U.S. equity futures, Francine, in the green. The sell-off that we saw in risk assets into the close yesterday, having a bit of a reversal. S&P futures and NASDAQ futures both up 0.3%. Even European equities here are off their lows as well. As we head into the U.S. session where we do have some inflation data, it's nice to see the equity market stabilizing because it has been a shaky few sessions. We flip on, we can just see how the S&P 500 has performed this week because it has flipped into the red year to date, Francine. It's also slid over 4% in the week following. It's a big slide for the S&P 500. It's really retraced from those all-time highs hit a few weeks ago, but notable that equity outperformance when it comes to Europe is still performing. Those European equities, the rest of the world equities still outshining the U.S. We flip on, we could just take a look at how that has been faring. This white line here is the European equities up some 9% still year to date as that blue line S&P 500 flips into the red.
Valerie, thank you so much. Valerie Teitel there with some of the market moves. Now, Bitcoin could mark its biggest monthly drop since 2022 by the end of today as investors rush towards safer assets. Now, the cryptocurrency has fallen more than 25% from an all-time high 6 weeks ago. Emily Nicole, a Bloomberg crypto blogger, joins us now. Emily, I mean, this is huge. I was like looking at the price and I was like, wait, didn't we start at this much and now it's like 79 something? What happened? 25% lower.
I think you can never discount even what Valerie was just talking about with the impact in the macro environment, everything that's happening to stocks. That knocks on crypto too. Bitcoin is considered still a very risk-on asset, so when there's turmoil happening in the S&P 500, you're going to see that in Bitcoin as well. And so that is definitely catapulting this. But on top of that, in crypto, we've had a really rough period. We've had a $1.5 billion hack last week. We've had some tumult in terms of what's going on in politics as well. So in terms of what people are expecting to see going forward, it's still very much up in the air as to how Bitcoin could perform even today.
So is it based on fundamentals? Is it risk on? Again, we were expecting a lot from the Trump administration on Bitcoin. Where are we on that?
So some of the things that Trump promised to do on the campaign trail have not yet come to force, and those are the kind of catalysts that we're looking to as potential upsides for Bitcoin in the weeks ahead. Things like a strategic Bitcoin reserve, actual progress being made on bills in the US. We've got 2 at the moment being discussed about stablecoins. If actual progress is made in those areas, then that could be a big boon for Bitcoin. But the macro environment is weighing very heavily on its potential. And so if we don't get any movement on that, if things don't start to look up elsewhere, Bitcoin will continue to be down.
Where does it go next? Is it impossible to say? Again, when you're listening and hearing people, you're my go-to person every time I have a crypto question. What are you hearing?
We're all looking at about the $70,000 mark at the minute. So if it does continue to go down, which is kind of to be expected in the current environment, then that is the next point at which we're going to be starting to think, okay, that is where a lot of the risk is happening, a lot of where the options are being built up at the minute. And so when it goes through that threshold, that'll be where there's like true concern about the future.
What about the other cryptos attached to Bitcoin? How are they doing?
They're all suffering too, as to be expected. Some of them more than others. For example, Solana has had a really tough time this month with the meme coin scandal with President Javier Milei in Argentina. And Ether as well is having a very tough period because that was the crypto asset in focus in that $1.5 billion hack I mentioned earlier. And so those are really, really struggling. Without any kind of potential upside, Bitcoin is the tide that lifts all boats. Mm-hmm. So when Bitcoin goes up, the others tend to go up too. But those smaller cryptocurrencies are hit harder when there's turmoil in markets. They are just much more volatile by comparison.
Okay, thank you so much, as ever, for all of the analysis of what's going on in crypto. Emily Nicole there, our Bloomberg crypto blogger. Now, also making news, Meta is said to be in talks with Apollo for a $35 billion financing package to help develop data centers in the U.S. Now, sources say the alternative asset manager has discussed, provided a major part of the financing. Now, KKR is also understood to be part of the investor group. Meta has already spelled out plans to spend as much as $65 billion on projects tied to AI this year. Now, Tencent has realized its Turbo AI model with a claim that it's faster than DeepSeek's chat box. The AI service is designed to respond as fast as possible, and Tencent says the deployment cost of the model has also been reduced. Now, the launch underscores the dramatically quickened pace of development since DeepSeek stunned Silicon Valley with its low-cost model a month ago. Now, coming up, preparations are in full swing for the 97th Academy Awards this weekend in Hollywood. We'll take a look at what to expect from the Oscars. This is Bloomberg. Now, award season is well underway with preparations in full swing for the 97th Academy Awards this weekend in Hollywood. Well, joining us for more on what we can expect is Bloomberg's Daybreak editor Mark Perrier and Bloomberg Opinion's Andrea Felstenow. Andrea is working on the fashion side, not of the awards, but actually on whether LVMH may break up or not with a great opinion piece. Mark, you're looking at more of the fun stuff, but this comes in a very complicated, zeitgeisty era. So what are you expecting from them?
I think we're going to see a ceremony that's very respectful of the moment. The organizers, I've pointed out, they'll pay their respects to the firefighters. The city's still very much impacted by the fires. Conan O'Brien, who will be hosting, tough job ahead, but I'm sure he'll strike the right balance. We may not see the zingers we normally see at these shows, but the glitz, the entertainment factor will all be there.
Yeah, I was going to ask you, does it feel a little bit off tone? I mean, do the Oscars still matter?
They do matter. It really depends on the angle. In terms of viewership, it's come down in the years. That's more a reflection of viewer habits, but it's still one of these moments that brings the globe together, the world together. Everyone loves the movies, and it's the most important accolade you can get in the film industry.
And Andrea, I mean, again, there's a very fine line, closer and closer, between, some of the pictures, the films, the actresses, the glamour, and the fashion houses. Also, Kering bought a huge, agency brand a couple of months ago.
Exactly. Kering's Saint Laurent Productions was actually involved in Emilia Perez, so they're really close this year. But I mean, as Mark says, there aren't many of these moments that really bring people together. And fashion houses, what you want is you want your celebrity wearing your outfit to go viral and create a huge buzz about your brand. So we saw with Kendrick Lamar at the Super Bowl wearing the Celine jeans. Celine is part of LVMH. It's estimated to have created about $2 million in earned value for the brand.
What are you looking out for, Mark, in terms of films? I mean, it is also about the film. It's the fashion. I'm almost as interested in the fashion as I am in the films, but there are going to be some good films out there.
Very much. And the competition is very tight. The leaders are the brutalist conclave, and Honora would be my pick to win Best Picture. The tightest race is actually in the Best Actress category. You've got Demi Moore capping her comeback, Mikey Madison coming on strong, and Brazil's leading actress, Torres, who's also looking very good. It's going to be an evening of surprises.
It is. I mean, it's quite an odd one. So you have the big studios against like the smaller startups, but then you also have, I guess it's the first Oscar since Donald Trump got reelected. So I don't know whether the mood shifts from last year.
The mood will be, again, the writers on these shows are so smart. Conan O'Brien's team, they'll be writing up the jokes right up until it starts airing, and then they'll read the temperature in the room and whatever's out on social media, and they'll tweak as they go along. I expect something very glamorous, very respectful, but again, people need to laugh. It'll also reflect what's going on right now in current affairs, but I don't expect something as heavy as years past.
Andrew, what are you looking out for? I mean, is there if you see 3 bags on the red carpet, it's going to be outsold in the next 6 months? There must be some kind of Bloomberg ratio we can find out.
Yeah, I'm sure. I'll be looking out, given the Kering Saint Laurent link, obviously I'll be looking out for plenty of fashion from them. They really need it at the moment, struggling to turn around Gucci. Any lift they can get will be welcome. Obviously, looking out for all the big brands. The one wild card, I would look out for the Gap. Now, part of the Gap strategy has been having Zach Posen, its creative director, dress some celebrities. He dressed Divine Joy Randolph for the Met Gala. I wouldn't be surprised to see a Zach Posen Gap custom outfit on the red carpet.
Okay, so fun. I'll be also looking out for Burberry, because actually Andrea and I went to the Burberry show on Monday, and they've been under so much pressure. Let's see if they come up with something exciting. Bloomberg's Mark Perry, thank you. Andrea Felsted, also thank you from Bloomberg Opinion. Up next, the Bloomberg Brief, Danny Berger in New York, and this is Bloomberg.